Welcome back to the Crypto Nest. So I just wanted to make a long count and then what would be the potential third wave that maybe we were working on it, we initiated. So up to now, we need to take for granted that the first wave, well, for sure it's finished. And then maybe the first wave it's finished or we are still working on it. So let's take that in consideration that it's not a deal done. We can even see lower prices. So to estimate the third wave here, I'm going to pull out the Fibonacci extension. So from the beginning of the wave 1 to the end of the wave 1. So now people say, why you don't take this one? Because this actually wasn't the first wave. And this was the first one. And we did an A, B, C correction. And then up to now, we can believe that this was the end of a wave 2. So I'm going to take the end of the wave 2. Like this. So the third wave usually reached the 1.618. So as you can see, I already draw the box a little bit. Now it always moves around, but the idea it's about that. So the third wave should reach $8,050, or let's say 8,000. Ideally, now we can, crypto even go higher than that. So we will see about that. And the fifth wave often reach the 2.618 level, and that's 12,451. So this gives us a long-term count idea of the price potentially that it can reach. I would say next cycle though, not this one. Okay, so now we can see that now I'm on the daily chart. So we can see that the MA200, which is the average of the last 200 days, it was acting as a support for a long time. And then when was that? In January 2022, we actually start to break below for a period of time. And then here I start to act as a resistance. And since then, we were kind of far from this MA. Actually, let me take out this Fibonacci extension, so it's going to be easier. So I said here I acted as a resistance now. That was in March 2022. And then now, if we zoom in even closer, we can see that that was in November 2022. Acted as a resistance again, and now recently we flip it on 12th of January this year. We actually flip it, and now it's the price action is higher. So we crossed this MA200, which is bullish. Okay, so I think last week I did mention a dead cross and then a golden cross. Okay, so the blue line here, this is the MA200, and this one, paler one, it's MA50, so it's the average of the last 50 days. When the trend of the MA50 cross over the MA200, we call that a golden cross. And then let me find in the history, let me go back here. So when the MA50 though cross down the MA200, that's a dead cross. So that's a bearish sign, and then for sure you get that much I would say delayed, because it does the average of the prices. So when you can see that we cross over or cross down the MA200, price already started to reverse for a while. Actually, you can actually do the percentage of the price drop. So from the beginning of the top to when you start to add the dead cross, it went down almost 30%. So this is something that you need to keep in mind. These are delayed indicators. So now maybe we're going to have this golden cross soon. But as you can see, maybe we already started this uptrend line. Okay, so this is just to have a general view, and it's nice to have some indicators that they're more positive. Since maybe we're going to be, well, I believe we're already in a recession, but we'll see soon, officially, if they don't change their definitions. So we can see that this area is really valid because the price is really bouncing back. And then this level, actually the 1605, it's actually reacting often before as a resistance, and it acted as support, and it just flipped up and down. So we'll see how the price action finally is going to, which direction is going to take. Let's remember that if we lose this trend line again, we still have this red uptrend line that it did help us to support the price. And then if we, I would say, break this uptrend, then I would say, 70% that we're going to actually reach this ideal target for a level 4. Yeah, that's about it for today. Let me just have a quick view on the indicators on the 1-day chart. So we can see we're not oversold anymore on the RSI, and MACD already initiated a bearish crossover. So, and then the market, it's red. S&P 500 is in red as well. So we will see tomorrow and the day after, especially the 2nd of January. We have many reports, and then we have the Fed's. Is it tomorrow or the day after? No, tomorrow is 31st. So in 2 days, Wednesday, we're going to see the interest rate, and then we'll see how the market digests the news. All right, so this is all for today. Please like, subscribe, and hit the notification bell. And then if you have any question, drop them in the comments. All right, have a good day.